right, we're going to go ahead and get started. I want to thank everyone for coming out. My name is Brian Loyce. I am Ag Relationship Coordinator here at Community State Bank. And I just want to thank you. This is really, really cool that we can get a group of people together and learn something and hopefully, better the future of agriculture. So I do want to make a few introductions. In the back, standing up, we've got Dave Moyer. He is the Ag Manager and then Senior Vice President here at Community State Bank. I do also want to introduce Ellie Heigl. She's our marketing person, and she's really the driver behind this. She made everything happen, and it's here to hopefully make it. Now I'm going to have Scott Hudipole come up. He is the President and CEO of Community State Bank, and he wants to share some stuff with you all.
Thanks, Brian. Thanks, everybody, for coming. People that are watching this thing, if they send your address, we'll send some of the leftover sandwiches to you. Community banking's in my blood. I've been doing it for a long, long time. And what I encourage people to think about when you go through some of these things is, I'm 59 years old. So look at the history of how agriculture and banking have been put together over the years. And I started in banking like in the 1984 range, coming out of a really bad time in agriculture. My dad was a community banker for many, many, many years too. And it's just, no matter who you do it with, I mean, obviously we'd like you to do it with us, but no matter who you do it with, look at this as a long-term relationship. Look at this as a partnership, not as a vendor relationship as an example. I mean, look at it as something that's going to be there for your entire career in agriculture. And then look at how people get treated in the good times and the bad times. One thing we all know about agriculture, and I grew up on my grandparents' dairy farm in Iowa. One thing you know, there's going to be good times and there's going to be bad times, okay? We all know that. How you're treated in both of those is going to be really, really important. So ask your parents, ask grandparents, back during the 70s and 80s, how they were treated and were, what they saw, and some were better than others. And so I just want to thank you for coming and just encourage you to do that as you're looking for partners, banking partners in the agricultural world. Look at it for a long-term situation, not just like what's, pretty. I call it the shiny penny today. What's, who's going to be there for you, good times, bad times during the whole process. So that's all I wanted to tell you, just some of my 30 plus years of time. So thanks for coming.
Thank you, Scott. And to piggyback off that a little bit, not, this might be a shameless plug, but our ag banking team here, we're all farmers. We come from a farm. We live and breathe everything that you all are going through on a day-to-day basis as well. So just wanted to bring that up. If you have questions, please ask them. We'd love to answer them for you. We did have some help in putting this event on. We have the Racine County Farm Bureau Young Farmers Association here. It was kind of their idea to get this thing started and put all together. Now I'd like to welcome Jim Waldron up to give a little spiel on what that all entails.
Oh, we got a good looking group here for sure. Well, first of all, I want to thank Community State Bank for hosting this and putting it on. And Scott, thanks for speaking, and thanks for everybody from the USDA coming here too. I mean, I couldn't be happier to partner with these guys. It's been a goal of ours for a while to do something like this, and you couldn't ask for a better team in Community State Bank of someone who cares about the community, partners in the community, as you said, somebody to pair with and look at a long-term relationship. So on behalf of the Farm Bureau, as we're just getting started and working with guys at Community State Bank, I'm so proud to see this event come together. I was telling Dave in the beginning here, I didn't know what to expect with this, and to have a room full of people here, people eager to learn something and get to know. I'm really excited about what's going on here and the possibilities. So I'm Jim Waldron. I'm the president of the Farm Bureau. I should have started with that, but as you get to know me, I do things a little backwards sometimes. But Our Young Farmer Program is the one that put this together, and it's been on the plate for a while, and I'm really proud of them. They're coming a long way. Devin Coates is here, Kevin Hegman's here, Emily Peeler's here. So if you guys have any questions about Farm Bureau, feel free to reach out to them, come talk to me. It's a really good, fun committee. They meet at Dover Inn. They're very social. Every third Tuesday of the month, we're there. So pop in, check it out. If you've got more aspirations of Farm Bureau and the lobbying and the sort of political stuff we do, come talk to me on that, and looking forward to a good night here. Thank you.
Thank you, Jim. We appreciate that. And Devin, thank you very much for reaching out and helping get this thing set up as well. Greatly appreciate it. Now I'd like to introduce two members from the Farm Service Agency. We have Monique Nelson and Casey Rip. Is that how I say that?
Cassie.
Cassie Rip, sorry. They're here to discuss really the loan programs. FSA offers multiple direct and guaranteed loan programs. They're going to focus more on the direct side of things. Guaranteed loan programs is through a certified lender like Community State Bank. They really know everything in and out with it, with the direct program. And in the packets that we handed out, there's a couple of pamphlets that include some of the loan details that they'll be going over. Feel free to ask questions. And now I'm going to introduce Monique Nelson.
Yes, full room. Thank you, Ryan, for having us here. Monique Nelson with the Farm Service Agency. I'm a direct farm loan officer. I actually sit in the Dane County office, but our territory does cover 11 counties in the southeastern part of the state. Cassie Rip, also farm loan officer, like Brian had mentioned. She mostly covered Sauk and Columbia counties. So we're happy to be here, share information about our direct loan programs. If you have questions while I'm going through my presentation, interrupt me and ask the questions. If you're on virtually, put the question in the chat box and Ellie will read the question off. So. I got you. Okay. Show of hands, who've heard of FSA? Who's familiar with the County Farm Service Agency office? Great. Farm Service Agency, it's part of the U.S. Department of Agriculture, USDA, serving all farmers, ranchers, and agricultural partners through the delivery of effective agricultural programs. Within FSA, there's kind of two branches. So the farm loan programs, which I'm going to be talking about in more detail tonight, and then just farm programs in general. So the difference, farm loan programs provides credit to producers who are unable to obtain private commercial lending, including special emphasis on beginner farmers, minority, and women. Farm programs, on the other hand, with their local county office, they make direct payments to farmers based on eligibility for conservation efforts, disaster assistance, and price support. I know these maps are probably really hard to read, but here is our loan territory that Cassie and I are a part of down in southeastern part of the state. Like I said, 11 counties. Cassie's up here in Sauk and Columbia. I sit in Dane and cover everything to the east, and then we have two farm loan officer trainees helping us cover the southern territories as well, or southern counties of our territory. And then this map here shows all the county offices and where those are located throughout the state of Wisconsin. So within farm loan programs, like Brian had mentioned, I handle the direct, but we also have guaranteed loan programs. The direct programs are made and serviced by FSA. So you as the borrower are working directly with a farm loan officer covering that specific county. So if it's my counties, you'd be working with me. If you're up in Sauk, Columbia, you would be working with Cassie. Down here, Walworth, Racine County, Cole Hardiman is the farm loan officer trainee but Cassie and I are still assisting him through his training years. So again, you'll be working directly with FSA, Farm Loan Officer, and these are the different loan programs that we offer: real estate loans, term operating loans, annual operating loans, micro loans, youth loans, and then emergency loans. On the flip side, we also have guaranteed loan programs, and that's where, like Brian had mentioned, the loan is made and serviced by the commercial lender. So you as a borrower are working directly with the commercial lender, and then the commercial lender is FSA's customer. FSA can guarantee the lender's loan loss up to 95% if you're a beginner farmer. And borrower does have to pay a 1.5 guarantee fee. Real estate and operating loans are part of the guaranteed loan program. And then the rates and terms are set by that commercial lender. So direct loan programs in more detail. Designed to help farmers start, expand, maintain a family farm. Again, if they cannot get that credit from a private commercial lender. Again, we have different types of loans for which you can apply depending on your needs and your current situation. Each year, FSA targets funds to beginner farmers, socially disadvantaged farmers, women, minorities. And then again, we have farm loan officers available to help answer your questions nationwide. But wherever your farm is headquartered in, whatever county that is, that's the loan officer you'll be working with through the application process. So tonight, mostly focusing on beginner farmers. So you may ask, who is a beginner farmer? First, you must not have operated a farm for more than 10 years. Usually that's based on your Schedule F, on your federal tax return. We look at the first 2 years of filing a Schedule F. So less than 10 years of filing a Schedule F. 2, you must meet loan eligibility requirements for the specific program you're applying for. We have different eligibility requirements for the real estate loan programs versus the operating. And we'll go into more detail of those programs later on in the slides. And then the third requirement to be considered a beginner farmer, you must not own more than 30% of the average farm size in the county of your home headquarters or your farm headquarters. That acreage amount is roughly 60 acres. So at time of application, you must not own more than 60 acres and be farming for less than 10 years to be qualified as a beginner farmer. So some of the eligibility requirements. There's a lot of listing up here. I'll briefly touch base on them. FSA does have eligibility requirements in place. Each year, Congress designates a certain amount of funding for our loan program. So we have these eligibility requirements in place because, again, we're only allocated a certain amount of funding each year by Congress. So some of the general eligibility requirements are citizen of the United States, legal capacity to incur debt, again, unable to obtain credit elsewhere at reasonable rates and terms, having good repayment history, demonstrating timely payments. The applicant has to be the owner, operator, or tenant operator of the family-sized farm, providing labor and management, and also producing an eligible agricultural commodity. Not delinquent on federal debt. No prior FSA debt forgiveness. Have not been convicted for planting, cultivating, growing, producing any controlled substance. No federal crop insurance violation. Certain level of training, experience, education. And then lastly on here, having a realistic, feasible farm business plan put together. Question?
Could you talk about the experience training portion of that?
Yes, yep. Great. My next slide,
Perfect.
yeah. So for our farm ownership loan program to purchase real estate, the applicant has to have 3 years of farming experience. Lots of words on this screen. But 3 years of experience within the last 10 years prior to the date the application is submitted. Ideally, we want to see 3 years of a Schedule S. However, 2 of those 3 years can be substituted with one of these 7 items. So on the screen, you can see if you received a bachelor's degree in an ag-related field, that could count towards one of those 3 years. If you completed a farm management curriculum through your local community college, that could count towards another year. 1 year of experience as a farm laborer with substantial management responsibility. You have an internship, mentorship. 5 significant business management experience, maybe in a non-ag related field. That could count towards another substitution year. Discharge from the armed forces or successfully repaid a youth loan. So again, 2 of those could be substituted for the 3-year requirement. That 3-year requirement is for farm ownership loan programs to purchase real estate. Questions on that? This is a sticky, this eligibility requirement is very sticky.
The previous one just had a quick question, 30% farm size.
Yes.
It's like here at 60 acres. Is that just owned or more than that?
Just own.
Okay.
At time of application, the applicant has to own less than 60 acres, depending on the county. Every county, there's differences in acreage, but mostly for southeastern part of the state, it's around that 60 acres.
So you could have a child renting a farm from a parent?
Yep.
And, okay,
Yep, since they don't own any, they'd be still under that beginner farmer status. Question, yeah,
Are there any age limits of a beginning farmer?
there is no age limit. Great question.
How does it work if it's an entity applying for a beginning farmer loan or a direct loan or anything like that?
So for entities, the members with the most shares should be meeting those eligibility requirements.
Yes, don't you have to be 18 unless it's a youth loan?
Yes,
Sorry, nope, that's
Yeah.
okay.
you have to be 18 years old to apply for a loan program. So I guess there is an age limit there for beginner farmer. Direct.
What if you are a beginning farmer, but you inherited over 60 acres?
You would still be owning more
Than 60 acres.
60 acres at time of application. So if you inherited, you'd still be owner of that 60 acres. Unfortunately.
Or if you have like a land, let's say you inherited part, but you bought somebody else out and you're doing like a land contract. You don't own it yet, so you can still be considered.
Correct. Yep.
If the applicant is a part of a current operation, does he have to somehow separate his portion off in order to generate his own Schedule F and that type of thing?
Yeah, so the applicant of our loan program, the applicant has to be the true operator of that farm. If it's a beginner farmer, we would want them to separate off and on their own operation to qualify for a beginner farmer loan.
That'd be a subsidiary of another operation.
I guess I'm not understanding the question.
In our example, we're a vegetable farm. And so I don't know how we would operate that separately, just by incorporating my son into the operation.
Your son and you are 50-50 or how it is?
Right now, he's just an employee.
Okay, so if you do become 50-50, beginner farmer status, we would not qualify you at LLC 50-50 if you and your son are 50-50 members of that operating entity. So your son would have to be kind of on his own to get that beginner farm ownership loan to purchase real estate on his own.
But could he rent a couple of acres from him?
Yep.
Keep track of his records and expense and costs.
Yep.
And then be able to file Schedule F. So that would be a way to do it if with no ownership, just to be able to get them to file Schedule F of here's 5 acres, take care of it.
That's typically what we see.
And it's just that showing that he's making an income, but also incurring expenses as
Yep.
well as a farmer.
Oh, good question. Okay. Eligibility is very gray area. As you can see, every situation, family operation, we run into all different operations. So the best thing really is to get in contact with your direct loan officer for that county, and we can lead them through that entity situation or that transition plan from father to son. So now to go into the loan programs in more detail, farm ownership loans. Again, real estate, improve an existing farm. That's construction loans, that all kind of falls in this farm ownership loan program. This program, though, cannot be used to refinance existing real estate debt. That's a question we get a lot, beginner farmers or farmers who've been farming for quite some time, looking to apply for our farm ownership loan program to refinance their existing lender for a cheaper interest rate. Unfortunately, we cannot do any sort of refinancing with this farm ownership program. But there is 3 different types. The 545.50 down payment loan program, participation loan program, and then lastly, the 100% direct loan program with FSA.
Maybe mention too, so the 545.50 is the only program that you have to qualify to be eligible. All of the other ones you do not have to be a beginning farmer to qualify for.
Yeah. So the 545.50, like Cassie just mentioned, that's only available for underserved, veteran, or beginner farmers. This real estate program, the applicant would have to put 5% down. That's where the 5 stands for. The commercial lender, like Community State Bank, or a land contract holder, finances via at least 50% of the purchase price and gets the first mortgage position on that property with their rate, and they have to at least have a 30-year amortization period. FSA then provides no more than 45% of the purchase price or appraised value up to $300,150. And FSA gets the second lien behind that commercial lender or that land contract holder. So again, this be used to purchase farms, fair land, or improved farm properties with building sites. That 3 years of management farm experience is a requirement. Although you're a beginning farmer, you still need to have those 6 years of farming experience. The current interest rate for March 2023 is at a 1.5. And FSA's repayment term for our 45% is 20 years.
Monique? Question right here.
Are the rates for those loans fixed or variable?
They would be fixed, either at time of approval or time at closing. Whichever is lowest is what the applicant would get fixed for the 20-year term.
And then are the rates determined by a separate council, or are they tied into the Federal Reserve?
Federal, yeah, so 1.5, and they change monthly.
Okay.
But this 1.5, they've been locked in there for quite some times, but they do change monthly.
Okay.
And that rate is based off of 4% minus the direct farm ownership
Correct.
rate, right?
Yeah.
Okay.
Great question.
We got one more here.
Can you tie improvements into this? So say you're buying a farm and it doesn't have a barn, you want to make sure it has building, put equipment in. Can you put a construction loan in with this loan, or can it only be the value that's on the property?
For the 54550 program, we usually just do the purchase of the farmland. We could look at doing a separate direct farm ownership program to do the construction loan.
Okay.
Or if the commercial lender is willing to do that construction loan. But with the 54550 program, it's usually for purchasing the farmland or
Sure.
the site. Yeah, great question.
I'm sorry, I didn't understand. On a land contract, did you say it had to be a minimum of 30 years?
30-year amortization
Okay,
payment period.
could be pretty.
So no balloon payment within 20 years. And that goes with the commercial lender too. So most popular for beginner farmers looking to start out, that 1.5 interest rate is pretty decent out there.
Now, also on that, so if a person buys $1 million farm, FSA obviously won't be at that 45%, but that still doesn't deter FSA from being a part of it, correct?
Correct. Yep. The max we can do is that 300,150. So yeah, $1 million property. That would just mean that the commercial lender does more of the financing if the applicant can't pay more than 5% down. They at least have to put 5% down in this program. Okay, so the next type is the 50-50 program. Maybe that beginner farmer cannot put that 5% down payment at all. Then we can look at our 50-50 program. So the commercial lender or land contract holder finances 50%, FSA finances the other 50%. With this program, FSA can go up to 600,000 max. We do have a higher interest rate on this program at 2.75. This program is purchasing farm, building sites, construction, repair. Some of those funds can be used for construction or repair costs. Again, that 3 years of farming experience is required. And then the repayment is tailored to the operation. So with this program, we typically do go up to 30 years. This is the 50-50 program.
Do people have to be turned down at regular credit to get into this program too?
Yep, so typically with maybe they're not beginner farmers, maybe they're someone who's been farming for quite some time and cannot get 100% of the commercial credit. So we typically have them reach out to the commercial lender. If the commercial lender says, nope, let's do the 50-50 program, you're not meeting a certain eligibility requirement, we go down this route.
So a turn down could be because the bank doesn't do 100% financing.
Correct.
Oh,
They won't do 100%.
Okay.
Got a question?
Yeah.
Is the same bank that, I guess, turn you down, do you have to work with them or can you go to another one? Or how does that work?
We do like you to try at least a couple different commercial lenders. If one bank turns you down, at least have a conversation with maybe 2 other local lenders in the area. If you're turned down by all 3 of them, then you're looking at the 100% with FSA. But if the first bank turns you down, still really want to do the 50-50 program, maybe reaching out to another commercial lender.
But that's a requirement to be turned down?
It is a requirement for all of our loan programs. Loan programs, you do have to be turned down by the bank to be eligible.
That's actually pretty easy on this one because very few banks, none that I know of, are going to want 100% financing. So you're going to get turned down because you applied for 100% financing. So, I mean, it's actually not very hard to get turned down in that case because it's.
And then in that instance, instead of a turn down, it's more of a, yes, it's a turn down, but let's look at this option. This is another way we can get it done for you.
Yeah. We don't require a denial letter with our application packet. If we do the financial analysis and it appears that you can obtain commercial credit, then at that point, if you haven't already talked to the commercial lender, we would have you do so and provide us with a denial letter.
Okay.
It's especially if we're looking at the 100%. Let's say you're just coming 100%. You're coming to FSA for finding a real estate property because of the low interest rate. We at least want you to have a conversation with the commercial lender first. And then, like I said, we don't require that denial letter with our application packet, but if you come to us for 100% after we do a financial analysis, it appears that you could get commercial lender, we would want you at that point to at least reach out to maybe do a joint financing, a 50-50, or if you're a beginner farmer, 545. Is that?
This may be more for Dave and Brian, but when you guys do the loans, and does the banks usually give a little bit better interest rate because they're less risk on their half of the 50%? Or not really?
If they're applying for a guarantee, maybe on that 50%.
I guess it is a lot of stands or buts. Yeah.
There is, yeah.
Well, I didn't know if there's
Yes, most banks are risk, price, risk-based pricing, so, yeah, there's less risk, which in this case, if the bank has a first lien on half the value of the property, that's less risk for us, right? And or if there's a 90% guarantee on the side, like Monique was just saying, that's less risk. But it's bottom line, it's risk-based, so it's not like all of a sudden, okay, you've got a guarantee, or you've got guarantee, or you've got a 50-50 that immediately takes our rate from this to this. Not necessarily that simple, but it's risk-based, so theoretically it could be.
And when Dave says risk-based, we're not just looking at, one metric. We're looking at the collateral on the loan. We're looking at the cash flow on the loan. We're looking at economic factors, to be quite frank, that plays a factor in decisions right now. So, it's not just, is the collateral short, it's multiple things that we're looking at as well. So, and that's where the risk-based financing comes in.
But if a bank does turn you down and does deny you, then we could look at doing 100% of that real estate purchase with FSA. And that's that last third type. So that's where FSA provides 100% of the financing up to 600,000 is the max that we can do. Interest rate for March is at 4.875. Then we're usually at that 30-year term. With our farm ownership loan packet, we do require that the applicant have an accepted offer to purchase on that property as well. And FSA unfortunately cannot do a pre-approval process like a private commercial lender could.
Do you want to talk through the application process a little bit and kind of what that all entails and how did they get started?
Yeah, later on in my slide, there is an online assistance tool that applicants should go to first. It's that online assistance tool will take you through all those eligibility reports, kind of like we just talked about, the 3 years of farming experience and the other ones. It'll take you step by step and then ask you what you're looking for a loan for. Is it a ownership loan to purchase real estate or is it operating loan? And then we do have an electronic application packet, but I would suggest first go to that online tool. If it appears that you're eligible, then reach out to the direct farm loan officer in that county. We'll kind of go through those eligibility questions with you again. And if after our conversation, it sounds like you're eligible, at that time I would go ahead and email you an application packet. Fill out the application packet with that signed offer to purchase in hand. Once you have the application packet completed, the application or that accepted offer to purchase in hand, give me a call. I usually come to the farm, meet the producer, gather the application, and then it's Wisconsin's goal to make an approval or denial decision within 30 days of a complete application. If you're approved, and we're talking about real estate, farm ownership loans, either direct 100% or a joint financing, FSA would go ahead and order the appraisal if we do approve you. And then the bank is still on board for their 50%. After that first 30 days, if you're approved, FSA would order the appraisal. We would list Community State Bank as an intended user. That appraisal process usually takes another 30, 45 days to get that ordered and get that back and reviewed. After that appraisal is back, then we order title work because all of our real estate transactions do have to close with the title company. So that sometimes can take another 30 days to get that title commitment back and get our loan closing docs prepped and ready to go. So typically from time of application to a real estate closing, if you're working with FSA, either directly or 50-50 with the bank, it's usually a 3 to 4 month process. So it's a little bit lengthier, and we do tell that to the applicants when they're drafting up that offer to purchase with the sellers, that if you're working with FSA, there is a longer turnaround time, closing timeframe that offer to purchase.
Can you use the programs together? Let's say somebody came in that did the 50-50, bought the farm, bought the real estate, and then somebody asked about like a barn.
Mhm.
Could you use the direct loan? If, let's say the bank says, can't do it because we're, FSA is in a second position, all the equity. Can somebody then qualify in theory for this to like build a barn?
Correct, but we're
Okay.
maxed at 600,000 total
But it,
with direct FSA funds. So
okay,
600,000 is total for land purchase or any additional improvement needs or additional land purchases down the road. You're maxed at 600,000 total
So for the applicant.
$1.2
for
million.
the applicant.
Yeah.
Yeah.
If it was $1.2 million purchase, then you'd be done if you did 50-50. But if it was
Mhm.
800,000, then you would have possibly additional 200,000 you could borrow.
Yeah.
Does that 600,000 include any direct lines of credits or any other direct loans, or is it just real estate loans?
600,000 is just for the real estate. On your packet, it's just this loan information chart gives a good breakdown of all the programs we're talking about. And then it, as you will see in the column, the second column, the maximum loan amount. So for our farm ownership loan program, 600,000 is max per applicant to have outstanding. And then max for operating is 400,000. That's okay. Okay, so into farm operating loans. Farm operating loans can be used to purchase livestock, equipment, minor real estate repairs, refinancing debt with certain limitations. They'll operate. Maximum loan amount, like I just mentioned, 400,000 per applicant. Current rate for March 2023 is at 4.75. Repayment term 1 to 7 years. So if it's an annual operating loan request, it's a 1-year term. It's non-revolving. So it has to be paid back. And then if you're applying for next year, you would have to reapply with the whole application process again. So it's non-revolving. It's a 1-year term. But if it's a term operating loan to purchase livestock equipment, we can go up to 7 years on those. And then the eligibility requirement must have participated in farming for at least 1 year. So like I said, for the ownership for programs, we want 3 years. With our operating loan programs, we want to see at least 1 year.
I have a question online.
Yeah.
I'm from Iowa, so it could be different, but is there a graduation clause that can happen after a certain amount of time on FSA land? And what criteria would need to happen to fall into that situation? Is it common?
That's a really great question. So all these direct loan program, FSA is temporary credit. We're helping those beginner farmers start off. And our goal is to eventually get those beginner farmers off to graduating onto commercial credit down the road. So each year we'll be doing a year-end analysis on the operation. And when it appears time that you are financially able to obtain commercial credit, we could graduate you off to, let's say, 100% with Community State Bank. If, let's say, they did a 50-50 loan to purchase the real estate down the road, it looks like they're financially strong enough, they've been building up their equity, and they can graduate off to Community State Bank. So we do have a graduation review that we complete on the applicants every year. So FSA, like I said, temporary credit, our goal is to get to eventually 100% with a commercial lender in your.
Does your interest rate change then when you graduate then? Does that like change whatever the current interest is there on the student?
So interest rates do change monthly, but when you close your loan, your farm ownership loan or operating loan, it is fixed. So that interest rate would stay.
Okay.
If we do graduate you off to a commercial lender, the commercial lender would refinance us out and the loan would then be on their terms and their interest rate.
Is there any lock period that you won't graduate out? You just-
Any locked period?
Yeah, I mean, like you won't graduate.
There's not a certain amount of years
Okay.
of when we kick you out to. It all is based on that applicant and their financial.
No, that does not apply for the 54550 program, correct?
It still could apply.
It does, okay.
Mhm. It still could apply for those beginner farmer programs. Great question. Okay, then into microloans. So anything under $50,000 is considered a microloan, either farm operating or farm ownership. So maybe it could be minor real estate improvement. You could still do a microloan under the farm ownership program. So microloans provide access to credit and an alternative for those smaller niche operations like specialty farmers. It's a simplified application process, paperwork and verification requirements, reduced security requirements, and then a mentor. If the farmer has a mentor lineup, that could replace the 1 year of experience for operating loans only.
How long does that last one take to apply? You get approved?
Still taking roughly around that 30 days. With our, I know I mentioned the time frame for farm ownership real estate programs, but even with our operating programs, our microloans, it's still Wisconsin's goal to make a decision in 30 days.
Wisconsin's goal for 30 days, it's national goal for 60 days. So we could actually go up to.
And then lastly, youth operating loans. So youth loans are designed for producing a micro project. The project must be modest in size, educational, and supervised by a mentor or participating in a 4-H, FSA, or similar organization. $5,000 is the maximum. There is no minimum. Repayment periods can vary 1 to 7 years. And then this is the applicant age requirement of being at least 10 to 20 years old. The guardian must consent to the loan application. These are available out there. We don't have a lot of them, but they are available for those looking to start a 4-H or FFA project.
The legal guardian, are they then considered a cosigner? Yeah.
Lots of good questions throughout. Any additional ones?
54550, where it has for 30 years of snow, for 20 years. Does that mean for that first 20, years, you can make, any higher payments than what your monthly payment is, or what is it?
So we don't have prepayment penalties with our loan programs. We don't have any prepayment penalties. The joint lender cannot have a balloon payment within the first 20 years.
What is the balloon? And then I guess exactly.
So the commercial lenders have an amortization, so a repayment period of at least 30 years, and then cannot have a balloon payment before that 20 years. So they can't have a term of years
But
to pay
basically,
back their
Oh,
a balloon payment would basically be a payment larger than your monthly payment at that point. You know, if you owe, that's a 30-year amortization, but year 20, we want you to pay $100,000. That would be qualifiable, but year 15, we couldn't have you do that at that point.
I have somebody typing in a question on here. I'm just waiting for them.
Okay. Kind of just go to interactive. Again, this is a recap of our interest rates for the month of March. And then, like I had mentioned, here's the new online loan assistance tool. That website. So I would encourage all FSA inquiries to first go to that online tool. Answer all the questions correctly and you're eligible, then you would want to be reaching out to that direct FSA loan officer in your district.
We can send this link out to everyone after the meeting as well. We can send it out tomorrow to you all.
No problem.
We meeting LA.
I just paused this wrong.
So I included my email address up here. Like I had mentioned, Cole Hardiman is a farm loan officer trainee covering Rock, Walworth, Kenosha. I'm up in Dane County covering Dane, Jefferson, Waukesha, Milwaukee, but still helping assist with all 11 counties of our territory.
Cole started working here originally in accredited analyst.
Yes, he said to tell you guys hi. Yeah. Us for a few months, he's still in the 2-year training period. Question?
is Cole, Tim Hardiman's?
That I don't know. Tim Hardiman
Oh, I don't know.
from the Argyle
Yeah.
area? Green County area?
Is there any other questions?
Are there just monthly payments or do you have an annual for like crop farming and things like that? Is there?
So usually with crop operations, we do a January 1st annual installment amount for repayment of the loan. So if it's a strict cash operation, we usually set you on a January 1st. Of course, if you're a dairy operation, we want your monthly payments to be coming through that dairy assignment, the check. Mhm.
Can you make accelerated payments like in a dairy, at a dairy, you pay half, your payment was $1,000 a month. Can you make a $500 payment on the 15th on your first check? And accelerate, I'll eat the loan from the back way up, usually about 17 years on a 30-year mortgage. So that, can you make that kind of payments?
You're paying twice a month?
Half early, always early?
Yes. No prepayment penalties.
Okay,
Your payments will always apply to interest first and then to principal, but
Yep.
FSA does not have any prepayment penalties.
Thank you, Matt.
Back to the 60 acres thing, does that just mean if you have over 60 acres, you don't qualify for any of the farm ownership loans?
Just for that 545.
Just the 540.
Excellent question.
On the participation loans, are you making your payment to the commercial lender or are they split?
Yeah, So either with the 545-50 program or the 50-50 program, basically you have two loans, with one with the commercial lender and you'll be paying them directly, and then one with FSA and you'll be paying those directly. So two mortgages will be filed on the property, and then basically two loans that you'll be repaying commercial lender, and then you would also be repaying FSA.
Are you gonna talk at all about loans or?
Guaranteed, the question was guaranteed loan programs. I do not handle those guaranteed loan programs in our area. So they have centralized that within the last couple of years.
Yep.
So depending on the commercial lender, I believe you, Community State Bank, work with the Fond du Lac office.
Yep.
So depending on the commercial lender, they're either working with our Fond du Lac FSA office or they're working with our Grant Lafayette County, especially for the southeastern part of the state. They're sent way to the west or.
And the question with guaranteed loans, so that's a completely separate program from what Monique and Cassie deal with. Guaranteed loans are strictly through the commercial lender of your choice. So hopefully with us, Community State Bank. And there's various options. We do lines of credits that are FSA guaranteed. And what that usually is for, say, is a six-year term on the line of credit. So it'd be 5 years of borrowing, and then the 6 years is moved to repayment. And usually in that 6 year, we restart a new one for you. So that's just one example that we can get up to a 90% guarantee on FSA guaranteed loans. It's kind of standard practice here that we do that 90% guarantee if there's a need for it. The one cool thing about anyone that qualifies as a beginning farmer is that 1.5% fee is waived for beginning farmers. So you get the guarantee for free, and then it's at a 95% guaranteed for us as well. And a guaranteed loan can be a land loan, line of credit, tractor loan. I mean, it varies, but you can get almost anything for it.
So going back to Gary's comment, does that mean an interest rate since
It all
it's
dep-
95% guaranteed?
It all depends on the risk rating. Yep. I like the question though.
Did they do, wasn't there one time where, so now you can buy from family members?
Real estate?
Yes.
Yes. Yep. So you could purchase from father, grandfather.
Now, there's a chance some of the stuff could change too with the new farm bill coming out as well, correct?
Every 5 years. Yep. So we're up for a new farm bill.
You know, like your down payment's under 50% or in any of these, is there like a PMI that goes with this? Like, let's say like on the 545-50, like you're only putting down 5%.
You could put down more.
You could, I'm just, in theory, like, let's say you were under like that 20%, is there a PMI then?
It's the 1.5
Yeah.
guarantee fee. So that's,
Okay.
that'd be like an equivalent PMI on a house loan.
But on the direct side, there's not that PMI fee that you would have to pay or anything like that
For first time, right?
for beginning farmers. Yep.
Yeah.
Yep, that's correct.
And we don't have, on the direct side too, the timing is quite a bit quicker. I mean, so
The
it's
guaranteed side.
the guaranteed side, I'm sorry. Guaranteed side, like when we do it directly, it's, the process is quite a bit quicker.
Yeah, through the guaranteed side, it's all our underwriting standards at that point. And FSA has different tiers. It's preferred lender, certified lender. There's one other than a standard lender. We're a preferred lender for FSA. And we have to go through different requirements and eligibilities to meet that status. And that's the top status that we have. So they take our underwriting procedures and they stamp their approval on it.
So we get those through pretty quick.
Mhm.
Yeah, it is a way faster turnaround time than our direct loan programs. As you can see, we're 11 county territory and we have 4 of us loan officers spread throughout.
But there is definitely benefits to the
There is.
direct loan program.
Yeah. Our application packet is lengthy, but if you're willing to work through it, it takes time, and that real estate transaction, if the seller is willing to work with you and wants the farm to go to you, that 3 to 4 month closing, hopefully that seller is willing to work and make sure that the farm is being transferred to that next generation and understand that process. But we just like to have you be aware of that requirement, so that when you are talking to that seller, you're putting realistic terms on that offer to purchase.
All right, if there's no other questions, can we give Monique a round of applause, please? I'd just like to thank everyone for coming. If you have any questions for me or anyone at Community State Bank, please reach out to us. We've included business cards. It's got my cell phone, work phone, email, anything you need, give me a call. And I'd be glad to help you. Thank you.